Okay, good morning, folks. Tech wreck last week. Bitcoin struggling to get over 100K, even 90K. Econ data this week, a jobs number on Tuesday, PPI on Friday, CPI on Thursday. Ratings, man. We got some major ratings to figure out here and talk about. Special guest, JR Romero, traveling across the country. He's going to join us early. Folks, it's a Monday. It's Dennis and I. No Brentster yet on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning. We're looking at the March. Yes, March contract of 2026 in the S&P futures, leading up to the quad witch expiration, triple witch, whatever you want to call it on Friday. We could talk about that. We're up 33 handles after that shellacking on Friday here, trading near the highs of the session, 69.2250. Really kind of range bound, folks. More pressure under the dollar. We're getting a little death cross there, the 50 and the 200. We're down 13 cents, 97.89. TLT, I mean, interest, I guess they didn't get what they wanted out of Jerome last week, but we're rebounding up 35 cents, 87.69. USO under 70, down 16 cents, 68.65. GLD gunning for 400, up 373, 399.17. SLV, not big, left out in the cold, up over 3%. 1.83, that's 57.93, and Bitcoin futures consolidating here at the $90,000 level, down $540, 89,900. Triple D is hopping on the stage today.
What's going on?
Not much. How was your vacation?
Well, the vacation was interesting, so we're not going to talk too long about it, but it could have been better. So I am healthy. I've been healthy thanks to Lisa Elconin and the antibiotic. But on day 2, my boy and my wife both got, I don't know what they got, fevers, chills, like COVID part 10 down there in Dominican Republic. So they were in the hotel room for 3 days in the middle of it. And then my daughter got it at the end of it. So we basically had the first day was good, and then we were sick the whole time. I've been good. So we did get the last day. My daughter was kind of like being a trooper, and then my boy was getting better, so enjoyed the ocean and stuff, but kind of ruined the trip to a certain extent, though. And then you were on vacation there too, Joel. So I think yours was better.
Well, a couple days it didn't get over 75. So that was a little bit of a dip.
Now, we were awesome weather. 84. So the one thing about Dominican, it's so consistent. 84, low 75 overnight, and sunny every day. The weather's unbelievable down there. Like, I just think about what I'm looking at, which is it's snowing again right now. I have 2 feet on the ground and thinking, oh, man, I'm doing something wrong. You know, sitting up here, snow. Joel's is leaving, but it's ridiculous to come back to this. So it's 12 degrees Fahrenheit here right now. So I leave 84, come back to 12. But, you know, the weather, unbelievable. So I know Florida can be iffy this time of year. Like, you can get some cooler days. But you got something to show me? You look like you're getting something to show me.
No. I just I printed up some notes here. But you know what? They're not here. People aren't here to listen us about our vacation here.
No.
They're here to listen about the markets.
Well, at first, we've got to thank Real Life Trading for last
Oh,
week.
my Lord.
Because I watched the shows, and I got to tell you, Tony and Jeremy killed it. They killed it. Thanks, boys. You guys killed it. The chart, they were doing an awesome job with it. I was like, oh.
So we lost Dennis. We had Dennis, but you know what? We got a backup. We got a backup plan. We got J.R. Romero, and Dennis is trying to. How you doing, J.R.? We're little technical difficulty Monday here. How you doing?
Live television. You got to roll with the punches, Joel.
All right. Well, Triple D's trying to get connected here, so I'm gonna run with you here for a second. JR, you're on the road. You're joining us from the road.
Yes, I'm in Billings, Montana. I'm on the way home to North Idaho, and just taking in the beautiful country coast to coast. It's an amazing drive. If you haven't done it, it's a bit of a drive.
Yeah.
My son and I were talking about the size of this country. We realized that the drive from New York to California is the same distance as Paris to Moscow. We forget how enormous our country is, but it's definitely worth doing. It's
Okay.
really
All right. All right.
amazing.
You're from out there, right? Out. Are you from Idaho originally?
I'm originally a Jewish guy from Brooklyn, but yes, currently North Idaho. I needed to
Wow.
change the scenery. Yeah,
So that's where you live permanently?
yeah, yeah.
Oh, I didn't know that. And okay. So Triple D, I see him here trying to reconnect, but I don't see his video and I don't really hear him. Uh so let's talk about you're on the road and you're following the markets. Are you
Yes.
trading as much? Are you just maintaining positions? I mean, how do you
Well,
handle
I left the
traveling trade?
minute the bell closed. I left the minute the bell closed on Friday, and I've just been hitting the road. I've been amazed by the price action in the market that has become you just sometimes the market just amazes you by its ability to make every prediction look terrible. You know what I mean? Um, and it's been one of those consolidations just let's make everybody look very foolish. But I think it's very exciting. I'm bullish into the end of the year. I think we have some momentum coming back. I think the AI trade is coming back with a vengeance, and I think the market's wisening up.
Do
I
you
think
wanna
there's
pop up your what's your primary indicator here? For that, like say, hey, we're okay, we're gonna be okay for you and use the S&Ps. What's your proxy for the markets?
I like the S&Ps. I think the SPX is the indicator to watch. We've been seeing some really different things happening, which I think have been fascinating. Let me go ahead and share my charts here. Do we have Dennis
Okay,
back?
I'm looking for them. You're an
Yes.
old pro at this.
Sometimes you lose a soldier along the way, right? Hold on one second. All right. Let's just share charts. I'm on my travel rig, guys. So just bear with
Yeah,
me.
yeah. How many monitors do you got there on the travel?
I carry. This is preposterous. On the road, I will carry a giant 49-inch monitor with me. It's the size. I mean, it's the size of a small wall, and I will just pop it up, and until I get home, and then I basically have like a Houston control center back in the house. But
Gotcha.
yeah, it's good enough. All right, so yeah, we're watching the.
Okay, there's your charts.
Yes, sir.
Let's talk about what we're looking at.
Yeah, so we've had some really wild turnaround candles, uh, daily ranges that have been pretty wide with some really volatile turnaround bars. The shorts have found fair value around 68.99 and have been hammering the price action, and we've had a ceaseless bid around 68.05, 68.15, and it's just been ping ponging back and forth. And I'm bullish for a breakout over 69.20 into year close, but it's been very difficult. We've had a very stubborn 10-year yield that's bounced, or at least bounced last week, and sort of freaked everybody out. Despite the start of a sort of quantitative easing. The Fed is supposed to start asset purchases again, so a lot of technicians are scratching their heads, wondering why we've been seeing such Friday we had that big buy set up there through the 10-year on 4.173, and it just added a lot of pressure into the equities market. I think a lot of people are concerned about the fact that the correlation between Bitcoin and the Nasdaq appears broken for now, and I think it's brought in a little trepidation here regarding our end of year rally and seasonality that somehow seems to have not shown up for work yet. So,
do you think? I mean, but does the market necessarily need Bitcoin to rally? I mean, as long as it's stable.
so no, it absolutely not. I think more than anything, I always tell my traders is Bitcoin is as much an indicator of easy money, liquidity, and diffusiveness in the market as it is an asset. And clearly, there have been some liquidity concerns under the hood, and I think it's caused a little bit of a pause there. But the way to approach this market, in my opinion, in the past month or so, while the SPX is building what looks to me like a right side to a very big base that started in late October, has been to really focus on names that are showing strength and momentum for the day. And we've had these wild rotations, and I think that it's been very much a stock picker's market. If you're not trading the indices, which has clearly been a sort of a choppy balance range where you're just playing mean reversion, you have to be really picky. Like Tesla, for example, broke out through its value area high on Friday again, closed near the highs and closed above its big gamma exposure level. You had a call wall at 450 into expiration. We closed higher, and now to me it looks like Tesla's ready for its move to 470.
500, JR. That's what I've
and
been
then
calling
potentially
for. That's my
there
end of
he
year
is.
target at the beginning. I am back. Rogers Internet killing it for me once again. Here I come back 5 minutes in and it just drops. So the good news is I've got it back working temporarily. I am in a blizzard here right now because this is what Canada's all about. So, but stop at value area. Talk to me. How do you come up with value area? What does that mean?
Yeah, sure. I'm sure you're our friend Mr. Fromhertz also uses this as similar indication. It's a distribution of price where you use volume at time to establish areas of value in the Gaussian distribution of price to determine your most transacted areas. And you can see here on this chart as you approach 460 that you have a very thin profile to the left here, meaning fewer transactions have taken place there, and you notice that those transactions, for example, on October 2nd got faded, right?
Yep.
You had a failed breakout there on October 29th.
Yep.
And a secondary failed breakout there on the 3rd, a giant reversal on November 6th, and ultimately gave you a full, what they would call a value rotation. And it seems to me, just watching the order flow in Tesla, watching the tape, that they're going to make that run for 470, which is or 475 to be precise, 474.07, which was the high of November 3rd. And it does seem to me like we have now the base in place technically, and the catalyst for Tesla for it to go much higher. So
I think
I
so
believe
too.
Yeah.
And you've got some catalysts here happening over the weekend, like multiple catalysts here over the weekend for Tesla. Over the weekend, they were showing videos that they are now doing an Austin. They are now doing full self-drive without safety drivers. So the car is completely driving by themselves. I haven't had confirmation, but Elon Musk did say it does look that they are just starting to test that. So that was a catalyst. And then you've got Dan Ives coming out with a bullish note here this morning. Again, we know Dan Ives has been a huge bull and obviously a huge mover on Tesla itself. He reiterates his outperform, putting a $600 price target on it, viewing 2026 as a pivotal year with autonomous driving, robotics taking center stage. I agree with that as well. Dan Ives is also going to be on CNBC today, I believe, at 1 p.m. So that's a catalyst in itself. So you've got a lot of catalysts here for Tesla to be up to 5 points. It is this morning here. And you like the technicals too. So I love it when we get a catalyst happening along with technicals as well, JR.
Yes,
so,
exactly.
So thoughts on that? Go ahead.
No, I'm sorry, please.
No, I was just going to say, do you do the combo approach? Like I kind of look at the charts, see if I like it, and then see, do I have a catalyst? Do I have a reason for it to go higher? Do you look at that as well?
It's so important. Like catalyst, relative volume, sentiment are the first things that I look at after I see a chart where, okay, the general supply and demand picture looks like it's amenable for momentum. It's all about those other things, right? A chart is just a snapshot of demand and supply and that auction over time. Like people need a reason to buy this stuff, right? And so if your relative volume is at 37% and you're just oscillating back and forth between fair value for buyers and sellers, like, yeah, the chart may look really pretty, but that's not a real door, man. It's just a door painted on the wall and you're about to bump your head against it. You know what I mean? It's really important for me. And also, like, there's other really important sort of relational catalysts that you have to pay attention to if you're trading Tesla. Like, Tesla is not viewed by Tesla. I mean, look, I've argued this endlessly with my friends, you know, whether Tesla's a car company or a technology company or a ticket to Mars, you know what I'm saying? But I don't know if you guys listen to the Philip Johnson of StarCloud over the weekend. There's a podcast, the Farzad FM. It's a great tech podcast, and they had StarCloud on. And these guys are basically going to be putting data. And this sounds insane, okay? But they're putting, with Google, these are serious guys. They're putting data centers in orbit, right? And they
data centers everywhere. We want so many data centers that it just blinds the sun, just like data centers.
This is some Dr. Evil stuff. They're going to put
I heard
data centers in space, and
everywhere.
Apparently it's going to increase the speed to market of data centers. They're going to use solar power. You're not going to need building permits and all the regular stuff. Apparently, it's going to revolutionize data centers. That's what they're saying. Yeah. Regardless of that, Elon Musk took about 75% of that conversation. And, you know, the main message that the Tesla bulls and Elon Musk proponents are putting out there is that each of these companies that Elon is putting together is a specific piece of a puzzle that is going to ultimately turn into a giant revolutionary step for mankind. And it's not just Mars, it's Earth, and it's self-driving, and it's insurance, and it's energy, and so on and so forth. So, you know, the more this tends to advance and materialize, I think the more excited the Tesla bulls get. And whether they're right or wrong, more people are willing to buy Tesla than not on that sentiment. So I think it's really important to really pay attention to these things, because a lot of fundamental analysts are going, wait, this is trading at what times forward earnings? And then they look at the GM and go, this doesn't make any sense.
No, I know. You can't compare them, though, because there's so many other things happening here. And again, the story is there, too. And I know I've been long Tesla a long time, and I've been a Tesla bull here for a long time. But, I mean, I get it, you know, and I do get this market as well. And maybe we should just talk about the market in itself, because it's interesting that Tesla is so strong when the Qs actually on Friday were really weak. I mean, we're bouncing back here this morning. But, you know, it was an ugly rug pull. And, you know, can you talk just briefly, you know, before we let you go, obviously, JR, just talk a bit about, you know, this rotation out of tech lately? Because really, it's been other stocks leading the way. I mean, interest rate sensitive names have come back quite a bit. Absolutely. The value trade, you know, you're starting to see some drug stocks still pick it up. It's broadened out. Like, you know, really 3 months ago, we were talking tech stocks and everything else was left for dead. And now it's broadened out. See, you know, a lot more stocks moving higher here. Tesla's its own animal. So Tesla wants to go higher. But, you know, the tech stocks in themselves, I mean, NVIDIA is not looking great at all.
No.
And it's your leader of AI. You know, AMD's not looking great. AVGO had a terrible day on Friday, which is why we were down. Yeah. So, I mean, is it just crowded? Is it to what it is? These trades too crowded maybe at this point?
I think the NVIDIA trade is too crowded. And I think NVIDIA's become more of an index than a stock. I think the market, this stupid debate about whether the AI bubble is here or not, in my opinion, it's a bit of a stupid debate, because we can't get these data centers built quickly enough. We have 3-year contractual minimums in terms of infrastructure build out. And if you talk to any 12-year-old or 15-year-old or 18-year-old, they absolutely cannot live without AI. You know, one of the companies I own, I'm a serial entrepreneur, so I always got a lot of stuff going on. We for example, just for quality control testing in our apps, we were spending $1.25 million a year hiring 2 different companies to do all of our code quality control. That's gone. We're just using AI. Wow. You know what I mean? This is happening now.
Yes. It
This
is.
is very different from the value proposition in 1999 with we were going to do fiber build-outs with Global Crossing, and the internet was going to be this great thing, but nobody knew how we were going to use it. This is a totally different animal, and I think so many of us who were there in 1999 have so much PTSD from that bubble that I think we're failing to recognize that this is a different thing. As far as the rotations, they've been wild, man. Like you're I've never seen so many people be so wrong intraday so often as in the past.
It's
like
tough. The intraday
really
trading
tough,
is
man.
tough. That's why I'm an overnight trader. I reinvented myself 13 years ago and became an overnight trader, where I'm like, because the moves seem more consistent, more predictable, you know. And if you're interested in that, you can always come over. I know JR, you sometimes come over to Stock Trader Network as well, and we talk about different stuff. But you know, there's different styles of trading. But intraday, there is like, we're ripping high. No, we're going back down. Is it just all the bots? Is that what it is? It's just bots, you know, jumping around, shaking us out, hitting stops. You know, is that why intraday is just so choppy?
I think also we're in a recumulative phase of the market, and they buy fair value at the low of the range, and shorts come in and fade it while we're absorbing that prior overhead supply in the SPX. It's a natural phase of the market, and you're just going to oscillate between supply and demand zones until you have enough of an inventory shortage that they're going to push it higher. But you know, like, I've been making fun of IWM traders. I'm not fun, but like poking jest at the IWM because it's been dead money for so long, right? And the past couple of weeks, you know, I got hundreds of traders in my room, but they're like, "Did you just say you went long IWM? What did you just say?" You know, what I mean?
It's been the worst place to be for the last 3 years, but I'm long it now too, and I'm like, it's broadened out. I mean, you're making new all-time highs there too. The rally is broadening out, which is a good thing. Isn't that a good thing?
I think it's fantastic. It just presents all kinds of new opportunities. I've been trading the solars like crazy, and to me, that was dead money for so long. You know, and then you have these like little micro rotations, these micro catalysts for like our GTI, for example, where you get a really nice move on the day, and you just know when to. You just have to know when to not overstay your visit. You know, but you're getting some really nice intraday moves, some really nice fades. You know, like look at Oracle post earnings, for example. There were some really great opportunities.
There's something else happening with Oracle, and you know, and I was in this, and then I lightened it up because I'm like, I'm too concerned that people are talking the dead, and they're taking on too much, and they're bringing it all. But Oracle has just been an awful place to be. Would you be a buyer here now, though? I mean, we look at it now.
No. But as a technical trader, given the conditions on the gap down, I said to my guys, like, there's an obvious fade here. You know, let's take advantage of this massive inefficiency in this gap and look for a fade long. And you got a nice trade there intraday. You know, so right now, my focus in this market, while we're just consolidating in the SPX between two obvious supply and demand zone ranges, is to focus on catalysts and strength, right? So we have weird things happening, like the 10-year yield freaked everybody out on Friday, right? Like we're supposed to be starting quantitative easing and asset purchases, well, really asset purchases, and you know the 10-year, if you bring up the 10-year yield on Friday, it triggered, you know, that chart triggered a buy setup. You know, and it started going higher. And we all know what happens when the 10-year hits 4.5, right? Things start to break in the market. So,
and stop there. I just want to go 1 point there, because here we got the Fed, which, you know, obviously lowering rates. Here we got the 2026 outlook looking like, you know, we're going to get a dovish new Fed. Why are long-term rates going up? I mean, this is, this
is what's making people nervous.
Yes.
Right. So, you know, and I'm happy people are nervous, right? You don't want to be longing a market where everyone's going to the moon, Alice. But there are still some problems that need to be resolved technically in this market for sure, and it's a really unclear picture, you know, in terms of the bond market. So there's been some real hurdles. My approach in this market has been to do one of two things: just the regression trade while we're in a balanced range, right? Not try to buy breakouts, and then find those names that are unusually strong on the day for whatever reason that are completely non-correlated with the market, like Tesla on Friday. We caught like 13 points up and 10 points down, you know, and in the meantime, we're waiting hopefully for that end of year rally. I think we're going to get it. I think Tesla at least is going to 474, if not 500. And then once the SPX takes out our key level, hopefully we have a really nice end of year rally here past that key level at 69.20. So, it's this market requires a lot of patience and just an enormous amount of sensitivity as to what's really happening. And you have to watch the 10-year yield. Crypto has become systemically important now, and a lot of people are trying to buy that bottom in Bitcoin. And to me, it starts to look more and more like a bear flag on the daily. So, we've had this correlation between the Nasdaq and Bitcoin as a risk on, a risk on correlation, and that's now broken. And we have to pay really, really close attention. What's working for me in this market is finding names on the day that is very high relative volume and relative strength due to specific catalysts. You have to watch the catalyst. There has to be a reason why people are buying or selling something, and then just buying buying and selling mean regression. If you're anywhere close, if you're an SPX or an ES trader, okay, and you're anywhere close to the bottom of that balance range, and you get that rejection around 68.05, 68.12, and you see a base build, that I'm buying that overnight, or I'm buying something highly correlated to it overnight, and then doing the same thing near the tops. I mean, that's what's working for me. You know what I mean?
Got to change different market environments, different styles. Just real quick, we like to teach. You used a term, and I think I know what you meant by it. But just talk to us about that Oracle trade, big down open. It's funny because, like, I see it down, and I see the earnings and stuff, but I'm like, it hasn't taken out the low of the move yet. But you said there was an inefficiency. Was that within? Was that order flow? Was that sentiment? Talk about your catalyst, how you approached it, and Oracle long term.
I have my chart up if you want me to share.
Got it.
Okay, so perfect. So let me just. I am trying to. I'm on a laptop, guys. So I'm trying to get
I know. It's
hard.
One second. To trade from the road, right? 1 second. Right.
Are you looking at like the 185, just where we were before, and saying, hey, that was a previous low from November, probably an area where it wants to bounce, where we may find buyers because we found there before? Because that's what's happened Thursday and Fridays. We found buyers exactly where we did back on November the 25th.
Exactly. So we were watching the November 25th lows, right? Which is also a major anchored VWAP. I'm a huge fan of the anchored VWAP. And it also is the low of the value area, right? So typically that would be if you map the breakdown from the 20th to that morning on the 11th. Basically, you have a complete and total confluence of 180 of anchored VWAP value area low. And what we saw that morning was we were watching the tape and the order flow very carefully. I'm a very old school tape reader, and we were watching those 185 40s, 185 50s, and every time they tried to hit the bid, we started to see the offers going bananas. Right? It was just they weren't just trading the offer; they were trading it above the offer. And so intraday, what that ended up looking like. I'll bring up the 5-minute chart, the old trusty 5-minute chart. Was
well, that looked the same.
What's that?
There was two areas that looked like the same when you were scrolling through the chart. Then it looked the same. It looked like it was almost on repeat.
Yeah. So this is the big gap down here.
Yeah.
And so I told my traders, like, you're probably going to have some reversion to the mean here. So soon, this purple line right here was the opening bar, and they came right into that value area low, into those 186s, and they couldn't take it any lower. And immediately, we saw them take out the upper VWAP band. We had a little buy set up here, and a lot of we called the trade out to 200. A lot of my traders just went long right here at 191.28,
Nice.
and it hit our upside target at 200. So these, these to me are like little gimmies the market gives you, right?
Yeah.
You have major oversold conditions into a massive area of support. You're going to have some shorts covering here. You're not going to, and basically the inefficiencies, just the late money shorts. I hate to use the term dumb money, but maybe the more less astute money coming in here and getting shaken out of a late money trade and shorts covering. So we like to, we always say we like to help the shorts out of their positions when they overstay their visit. So this is a classic type of fade trade, and these things are working really well in this market. Now, would I buy Oracle here for a longer term move back to the average? Absolutely not. It's completely unclear what the fundamental picture of Oracle looks like, especially with fears of them not being able to meet their debt obligations and free cash flow. So, but in this market, like I always tell my guys, like you swing trade for wealth, right? You day trade for income, and that's how you pay your bills. And this market is replete with opportunities to create daily income if you know where to look,
Awesome stuff, JR. We appreciate you always coming on the show. You help us over on the STN room as well. T3 has always been really good. We got a great relationship with all you guys over there. So, JR, we always learn a lot from you. We appreciate you coming on early in the morning with us and being here. When my internet comes down, JR to the rescue. Appreciate it, buddy.
I'm you guys' biggest fan. And great job last week with the sub team.
We're huge fans of yours as well. We want to continue to work with you. You guys give us so much good content, JR. You're one of the best. Thank you so much.
You owe us a podcast, Joe. Don't think I forgot.
Okay. All right. JR, thank you very much.
Thanks, JR.
Okay. Back to our regularly scheduled programming here, Dennis. Kind of getting back to things.
Well, I mean, let's start there. Like me and you both off. So just quickly, what do you do? When you're off, first thing you do is you start looking at some charts and trying to get a feel for what's happened since I went away. Because I'm one of the people that when you go on vacation, I'll look a little bit at the markets. I know you're not that person. You're looking, you're updating, you're seeing what the S&Ps are. But I try to separate it. I try to I'm on vacation. I'm with my family, with my kids. It's not stock market time. So when I come back in Sunday night here and, look in, I'm trying to figure it out. Okay, what's happening? What's happened last week? What were the catalysts? Look at some charts, and then what's the first ones you go to? Obviously, S&P futures, you go into there. But you also go NVIDIA. What's that look like? I mean, you bring up NVIDIA, you're like, oh, I don't look that great on the charts. And then, I knew the AVGO stuff because I do have Twitter and it's going through. So I am, so I knew that was, the catalyst for Friday. But I mean, you do have weakness in this AI trade here right now. You are seeing rollovers in a lot of stocks. Even Google itself, is starting to look a little bit tired. Not that it necessarily will change. And remember, seasonality plays in the parts here too. We're December 15th. We are coming into a seasonally very strong period for stocks. So if you're coming here saying, yeah, short the world, I think, this seasonality is not in your favor. So kind of like ducks in a row. But some of these AI charts don't look that great. But there are other stock charts, that we've been talking about, in the whole value trade and the drug stocks, they look really, really good. So, I mean, is this, time to start thinking? Barron's over the weekend was given their 2026 picks, Joel. I'm sure you were looking at it. A lot of value names there for 2026. Do you have it? Because there was littered with value names.
Actually, I did it. I did it.
You didn't look.
I did not look. No, I kind of tuned out over the last.
Okay, I have them in front of me.
Okay,
so last year a lot of tech names, but this year, we're looking at the 2026 picks here from Barron's. Amazon is on there. It's one of their top picks. But I start going down the list. I'm like, okay, well, Amazon, tech stock. But look, Bristol Myers, Comcast, ExxonMobil, Fairfax Financial, Flutter, MSGS, Madison Square Garden Sports, I'm long that, Visa, SLG, Disney. These are their picks. Barron's is saying, we got a broadening out rally here, and they are starting to get actually a little bit away from the tech trade. That's interesting. I still think I'm with JR. AI is going to still be the trade of 2026. There's going to be opportunities, and we're going to see AI stuff. But I also think with interest rates going down, as long as the TLT doesn't continue to crash, because that could be a wild card there. But if we do see long-term rates eventually go lower and short-term rates, going lower, I think it is good for the broadening out market. So, I mean, I kind of been talking value stocks here for 2 months. If you've been listening to the show, I've been on the drug stocks, the value stocks. We've seen a broadening out. The XBI has been just on fire along that in my long-term account, and it's just been a monster, straight up. So, I mean, this market is definitely not being driven by tech right now, and that's new. That's a new thing. Qs have not made a new high. I mean, if you're just all Qs, 637 back in October, we're 617 today. But that is not the same story. There's a lot of stocks performing very, very well. I mean, I've been talking about Bristol Myers. I've been talking about Merck. A lot of these drug stocks, Joel, Novo Nordisk is, I think, going to be on the comeback trail here too, because I think the valuations are just too damn cheap. So, and we've seen General Motors, going back to what JR was talking about. General Motors is just on fire. And like I said, when it was 50, I think a company should have taken stock private. Like, I mean, it was trading 6 times earnings, 5 times earnings. So Ford probably going to follow suit here. I mean, GM's had a hell of a move. So why bet against Ford? So we're definitely seeing some broadening out here. So that's interesting. So it's not all about tech right now. It's about a lot of other stocks as well.
Yeah, if you just want to go back, I mean, it just fundamentally, I mean, you can't clear the 50. I mean, look at that 50-day moving average acting like major resistance. 200-day, will we ever see 156? We all know about Microsoft. Microsoft has me shaking in my boots here. Look at this, just hanging out near the 200-day, and the rebounds are getting sold. Apple late to the party. That's a different story. Amazon here, right there. It's trading. It's trying to get above that 200, the 50-day. Google has been the beast, but you know what? Long consolidation up here, up $178. I mean, starting to work its way into the gap. Meta, what a stupid move that was. That spike up that day.
It was on nothing. Like, that was just
cutting jobs.
A little bit of cost cutting on the metaverse. I mean, that was a ridiculous move here. But that's what we're seeing. There is fades, like, in tech names. So, I mean, again, you're not seeing the fades in all the sectors, but there's been fades, and S&P sitting up here at all-time highs. You're like, everything is rosy. I mean, obviously after Friday, we're not all-time highs, but I mean, we're just saying they made new all-time highs, or at least close to it, on Thursday. But I mean, everything is not all rosy. The tech picture does not look nearly as good. But when you look, when you go outside of tech, I mean, new highs, and I'm just trying to scan here, like Johnson & Johnson. Look at J&J, just moving up. Consumer staple, obviously, they've got a lot of, it's drugs and that involved there as well. But, I mean, I'm just going to try to keep running the new high. So new 52-week highs. American Express, new 52-week high. Bank America, new 52-week high. Caterpillar hit a new 52-week high. It's come off of it now, but right now, this morning, bouncing back as well. Wells Fargo. And then there's the Walmart story, which was being talked about endlessly on the weekend on Twitter. It's 40 times earnings now. And I was tweeting out, I was like, and Money Mitch coming in, and he made some great points. Money Mitch, obviously, always with us. I tweeted out, and I was like, last time Walmart had a 40 PE, and I don't know if this is facts, but I kind of remember when I had a 45 PE was the year 2000. That was the last time. And then Walmart went for a 12-year period where it didn't have any gains at all. It was digesting because it just got overbought. I was saying, are we in that same period? Money Mitch made a fantastic point. He's like, people are hurting right now, and they're looking to places like Walmart just to be able to like buy the stuff they need because it sells the stuff cheaper than anyone else. And that's a fantastic point. So maybe the Walmart 40 PE is warranted. But when I compare it to Costco, and Costco gets a downgrade to sell at Roth today, and the Costco chart is absolutely looking ugly. So, I mean, this is interesting. You have Walmart. Usually I pair these. Costco and Walmart usually moving together. That is not the case in the last 3 months. Walmart has been going straight up, and Costco has been going straight down. I go to the Costco stores. They are packed. I should go grab the note and just see, because Costco was downgraded today. Let's just go find out by Roth and see why. So downgrade to sell at Roth Capital. They lower their price target to $7.69. They say despite a first quarter earnings beat, underlying metrics are concerning. Renewal rates are fading. Paid members have slowed. Year-over-year comp traffic is decelerating, and further competition is intensifying. Walmart and Sam's and BJ's are dramatically increasing investments and openings. So, Walmart's got their stores too. So, I mean, is this like, and Costco has carried a 45 PE forever. So you're not trying to get all fundamental here, but we're just doing the Costco versus Walmart thing. It's 43 times forward earnings right now. Walmart's 40. So I have not seen that. I don't know ever that Walmart would carry a PE higher than Costco. It's not quite there yet, but it is getting close. That's interesting. Something happening here.
There's we had Todd Gordon on Tuesday, and he was talking about Costco, and he threw in one thing that it kind of a outlier. I don't know what portion of Costco's business is food, but they got a hell of a lot, a lot of it. I mean, they do sell other things, but they sell a lot of food. He thinks this whole Ozempic and weight loss stuff, people are just not eating the amounts of food that they were before. And I don't know how much that is part of their overall sales, but I mean, a lot of that store is dedicated to food, and I'm not sure what the margins are either, but there's a fundamental thing.
People are eating less.
Yes.
I don't know. Like, well, look at Kroger.
Not me.
Because, let's just go out and Kroger hasn't been good either. So why Walmart? Like, I mean, if you look, they're completely bucking the trend. Like, Walmart sells a lot of their stuff, though. I mean, Walmart's grocery business is, I don't know the percentages in front of me here, but I would assume it's not, maybe it's half. Where maybe probably Costco, Kroger's all of it. So I don't know, maybe there's something to that, but I just cannot believe this move in Walmart. I mean, we were $60 in April. The stock has doubled. April 2024. So the stock has doubled in a year and a half. That's an incredible move. This is not an AI company. It's not a technology. I thought it was expensive when it was getting 32 times earnings. Now it's 40 times earnings. I'm scratching my head on this one. So, like, part of me wants to, short Walmart, go long Costco. But, I mean, the way the momentum works in this market, that's a trade that you've got to wait till you see something break. Like I always say, when you're shorting stocks, folks, kick them shoot them in the back. Kick them when they're down. When they start breaking down, that's the time to short stocks. Not when stocks are making new all-time highs. Walmart made a new all-time high on Friday. So, I mean, that's not the time to be starting shorts.
It's trading up another 29 cents today. Historical move. I mean, we can keep an eye on it. I mean, it didn't have earnings too long ago. So, you're looking for a catalyst. Also, a catalyst on the downside. You're void of one. One comment in the chat here, too. Someone was mentioned about, the people that got hurt in the first round of the layoffs, more of the middle class people, and maybe they're more of your Costco shoppers. So, but Walmart, I mean, they appeal to everybody. They appeal to, people in the lower incomes and also the middle incomes that are trying to pinch a few pennies here. And, and you can never, I mean, no matter how much money you have, you can never be too frugal. So they're still appealing to, a broad customer base. So we'll keep an eye on. We will definitely be keeping an eye on this Walmart one. Dennis, one thing I've known working all these years, you get on something and you follow it for a long time. And Dennis coming to the rescue here with the TradeStation banner. Chart, analyze, customize, all in one platform. And quick story for you. I was going to tell you this on a pre-market show, working real closely with a young lady over at TradeStation. Met her a month and a half ago, walking out of a restaurant in Delray Beach, and someone goes, "Hi, Joel," and boom, it was a young lady from TradeStation. So,
small world.
Yeah, small world. We're going to be having a lot more to learn about TradeStation here in the new year.
We're just warming up, and these charts are going to get more dynamic. There's going to be more drawing on these charts. We've got a lot of stuff coming for you here. So the TradeStation charts are so clean. Like, I look at these and they're so clean. I've never liked the 3-chart system, which we won't argue about that here right now.
That anymore.
But I mean, you get a good view. It is kind of good because you look at the bottom right chart, you can see Walmart just been blasting off, and obviously we pre-market prep, so we need to see the pre-market chart always to see what's happening there. But
we'll get someone over there we'll get their opinion. But all right, so we're all over the place. I lose you. I bring in JR. Now you're back. You talk to JR
ratings.
here.
I gotta go. We gotta go. Well, first we gotta talk iRobot. Let's talk iRobot just for a second here, because what the hell are people doing, man? Like, what is, like, I'm sorry, whoever is behind, the buying and is going to buy iRobot up and relentlessly here. But they told us before I went away on vacation, they said that they were leaning towards bankruptcy. They told us this 3 weeks ago. The stock was $1.50. What do? They come and they buy it up to $5.50. $5.50. They was like, well, we don't believe you, company. We don't believe that you're having problems. We don't believe that, the FTC has, torpedoed your company. We don't believe. And they buy from $1.50 in early December up to over $5.50. And now the official news comes out, which they already told us they were going this way. iRobot going into Chapter 11, going to be acquired by PICA Robotics. So looks like it. Trying to read that pricing. I don't know if we have it, but it's through bankruptcy. So they're going to get part of the part. So it's bankrupt. iRobot, game over, bankrupt. They're going to get acquired through the Chapter 11 process. So we don't know what's going to get left for shareholders here. Stock's down 70% this morning. And if you're long this, I'm sorry, you deserve to lose your money if you're long this, because they told us multiple times in the last few weeks they're having problems, that they're probably going towards bankruptcy. So the official news comes out. So, and then, bankrupt companies usually end up going down. So that's where we're at.
Also, well, you had a little catalyst with the robot trade here, and I cleaned up my desk before I left, so I don't have my robotics list. But that, that kind of, didn't Trump say something before we left, like a week and a half, 2 weeks ago, about putting more money into robotics? And
and they all popped. That was a big rich tech robotics he got there. Obviously, Tesla was a catalyst that day.
Yeah.
I don't remember which day that was. There's a whole bunch of robotics companies. So I recently bought SYM Symbiotic, which in the long-term portfolio, because I think that's another way to play. And I know the earnings, it's down in the earnings, the reaction. But, in my long-term account, I am a contrarian investor. I always have been. And I think the robotics theme continues. I think that theme is not over. I think it's going to be a big theme in 2026. Unfortunately, I don't know about iRobot. And obviously, it's been out forever. The Roombas are out there bouncing around your floors. And, it's a cool product. But, the FTC torpedoed it. Amazon was going to acquire it at $62 a share. Then they were going to lower it to $50. And the FTC said, no, this is competition. Too much competition, iRobot, or too little competition. We can't have Amazon and iRobot merging together, because what would that do for, these other vacuum companies like Sharknado, which I always call Shark Ninja, but I call it Sharknado. But, it's been great for them. But now here you got iRobot. It's gone. Thank you, FTC. Thank you. Bankrupt. Well, I guess, it's still going to be out there because it's getting acquired. But, this is, shareholders getting punished because of the FTC.
Yeah, I bet you Amazon's glad that they didn't get that. But yeah, Shark Ninja.
Well, Amazon would have been fine with it. They would have figured it out. And it's a drop in the bucket. Amazon wouldn't even affected them. It was such a small company in the Amazon. Shark Ninja. It's been on fire, though. This doesn't hurt. But again, it's not like it doesn't help either, because they're getting acquired. They're still going to operate. So this PIC, I don't know how you say PCA, is acquiring through bankruptcy. So it's not like they're gone off the board and, that's, you can see in Roombas anymore. It sounds like they're still going to be there, but the shareholders going to be out. So sometimes companies can reemerge from that, but at this point in time, doesn't look like much left. So let's go back to the ratings parade, because we had to get that iRobot news in. But the ratings parade is intense this morning. We talked Costco briefly. Goldman Sachs went nuts. They just went nuts. They're upgrading everything and downgrading everything. So I can just go through the list if you want to go through them all. But there's some big ones here. So let's start with the good. They're hot on the hotels. They're upgrading Las Vegas Sands, Marriott, and Hilton all to buy this morning. And also they downgraded Wyndham hotels as well. So WH to neutral. But Hilton, you look at these charts, not far from all-time highs. You look at Las Vegas Sands, it's a little different, but it's had a pretty good couple of months. You look at Marriott, not far from all-time highs. So I mean, we've been talking about this, market just broadening out here. These are not AI companies. This is like travel. People are traveling. People are doing stuff. It was busy. Like, the airports. I'm down there in Dominican Republic. It was packed. That airport was as full as I've ever seen. I don't know. Maybe it's, Dominican, this is time of year, obviously, but 84 degrees, love it down there. I think we have a chat member that lives down there. I'm like jealous of you because I got the blizzard outside here. But tell you, that Punta Cana airport, it wasn't, the operations are iffy there. But I tell you, it was absolutely packed. There are people traveling.
Yeah, we do have cruise lines coming out with some earnings later in the week. That'll be Friday, like right at 9 a.m. when we go off the show. But some of the airline stocks have looking good. UAL coming back, trying to get back its old. AAL's quietly moved up from
Delta?
12 to 15.
Delta's back.
I love Delta,
all-time
man.
highs
I'm
for Delta?
telling you. I fly. I know the exact opposite of yours, Dennis, but Delta.
Delta's just such a good airline. You fly Delta. Did you fly Delta?
Yeah. Yep.
You fly Delta, and it just feels like they know what they're doing. I flew WestJet, which is a Canadian airline, and I got to tell you, they have no idea what they're doing. It was just a mess. Like, it took me an hour and a half to check in. We try to do online check-in, Joel, and it's like it's through the whole process. Print your boarding pass and get to the end. It's like, oh, we need to see you at the window. Maybe that's a Punta Cana thing. I don't know, but we couldn't print the boarding passes. So every single person has to go through check-in to get their boarding pass. I mean, maybe again, this might be a Punta Cana thing. So I don't want to totally blame WestJet for that, but it was a mess. When you wait, I got to the airport at 2:00. We had a flight at 5:05. We almost missed it. Like 3 hours to try to get through the whole process of check-in security and everything. A mess. Just a mess. And WestJet was an absolute mess. Disaster. So, and somebody else said that WestJet's always a mess. I don't know. I don't fly with WestJet much, but I'd be hesitant to fly with them again. It was not good. Delta always seems to know. Like when I fly Delta, I was like, that was a good experience. Wouldn't you say with Delta?
Yeah. Oh yeah. Yep. We got the frequent flyer miles, and that's that actually just recently made a new all-time high.
Let's continue this ratings parade here because Goldman Sachs also downgrading ARM Holdings and Texas Instruments. I believe the double downgrade on Texas Instruments. They went from buy to sell on TXN. I got to go take a look here and what's happening. So Texas Instruments gets the double downgrade. Also, ARM downgrade to sell as well. Maybe we start with ARM because ARM's a little more widely followed. And ARM has been an absolute mess. I don't know what's going on with ARM Holdings, but you want to talk about the AI trade and like having trouble here right now. ARM has just quietly went from $185 a share, 183 just 6 weeks ago. It's $125. I mean, this looks awful. Look at that top right chart and blow it up. I mean, it is cutting through everything here. Goldman Sachs downgrading it now. A little late to the party, Goldman, but that's okay. They're downgrading from neutral to sell. They did have a neutral. They have a buy on it, so we'll give them a break. We downgrade ARM from neutral to sell with a 12-month price target of $120. Might get there today. I mean, 125. We believe ARM's high royalty revenue exposure to the smartphone market with locked-in royalty rates and low unit growth limits upside to fundamentals in the near term. Also expect ARM to continue increasing R&D spending to pursue the chip manufacturing opportunity, which will drive less financial leverage in 27 and 28. Finally, we note that SoftBank retains the vast majority of ARM's ownership. Shares, our estimates are 6% below street consensus. So they do not like ARM Holdings. This once the AI darling is not looking good either. There are so many AI trades that are starting to fade.
Yeah, taking a quick look at ARM down 5 sticks, trading right at the lows of the pre-market session. Boom, crashing. That's just the only two levels I could give you are two daily lows. 126.92. We are trading below that, and you got a big number here. 125.17, and looks like you hit that in the pre-market. So that was the low of the move from November 25th, and we'll be taking a look on that. And then Longer term, you see that 125 there, but stock had that amazing run in 2023. It's been choppy. Let's see if we can find support at the former low of the move.
We did have Cannabis talking, and Trump is expected to reclassify. These are rumors here. We don't know, but it was flying. So if you look at the moves from Friday, Tilray flying up here, and then continuing this morning, CGC, huge move from a buck. I get talking these stocks, it's pretty low price, but $1.12 to $1.92 here now in basically one trading day. CNBS, obviously that's Tim Seymour's cannabis ETF, who we have on the show often, flying to $23 to $38. MSOS, some people like to look at that one as well, from $4 to $6. Trump, so the rumors are expected to reclassify marijuana as Schedule 3 drug that would ease federal restrictions. Those are the rumors. We don't have any confirmation on any of this yet, but it seems like every once in a while, pot stocks get going, on regulatory, obviously, issues here. So thoughts on the pot stocks? I mean, it's a good pop for them. They've been dead money for a long time here, so every dog has its day, and apparently that day was Friday.
Yeah, Tilray reverse split for I don't know how many times here. Getting a little bit of follow through. Really, with these things, it's like, okay, well, you hear the catalyst, you have the move. Well, where's something to back up the catalyst here? And MOS pretty broadly traded here. Horrible looking long term chart. You hit a nice level in August. You peaked at 602. Your high on Friday, 599. Is this going to be one where you're going to look right instead of left? And then, boom, you make a bid at 6 and you keep going. So, got to keep an eye on holding $6 here, trading up 23 cents in the pre-market.
I'm still not done with the earnings or with the ratings parade.
Okay.
This is the biggest ratings day we've seen probably maybe in like months. ServiceNow and Adobe, both getting downgraded to underweight a key bank. ServiceNow also bought something or buying something, down 47 points here right now. So, I can get the details on some of this stuff here because I'm obviously catching up myself. But, key bank downgraded underweight. Armis, I don't even know what the hell Armis is, but that was, what they were buying here, $7 billion. Stock's down significantly. I mean, Adobe has just been a mess. So we talk Adobe. It has bounced back, though, because we know the value trades bounce back. Adobe is lower PE. So that's kind of looked a little bit better here. But, when you look at it out from 2020, last year and a half, Adobe almost $600 down to $350. It has been a good story. Ooh. ServiceNow has been kind of a mess here, too. That topped out early 2025 at almost $1,200. It's $800. So it's funny. We keep looking, and the stock market's at all-time highs. S&Ps are right near all-time highs. But, I mean, the broadening out is what's happened here because we have so many stocks that just, tech stocks that just don't look that as great as they did before. ServiceNow.
Yeah, the Adobe. I mean, these are the Adobe traded down $5. It had decent earnings here. So even though it's a downgrade, I'd be watching this one perhaps buy the dip opportunity. Really important thing would be to hold. It had that big day. Actually had two really good days on Thursday and Friday when the market didn't do so well here. So a little bit of 349.09. That's the low from Friday. You haven't reached that yet. When you're trading down $5, of course, the mark is going to be important at 56.43. That's actually the highest level of the recent rebound. ServiceNow. I like the CEO with the glasses. Sure, he's not happy today. Bunch of significant buyers in the lower 800s, really from 795 all the way up to 805. Not quite reaching that yet in the pre-market, but important here, the 50-day. You hit that on Friday at 876. Long ways away from that now. So the downgrade along with the acquisition not looking favorably by Wall Street. Right,
a couple
Dennis?
other ratings just quickly mentioned. Fastly upgraded to buy. Asana upgraded to buy. Akamai upgraded to buy here as well. Asana is always interesting because that's KeyBank upgrading all those stocks. It's always interesting because the CEO Moshkovich just like buys the stock every week. He's the biggest insider buyer ever. Like, I just don't know if he's eventually going to take the whole company private. Like, I don't know what percentage of it he owns now. I guess we could go figure that out. But I mean, nobody is more convicted in their stock than Moshkovich. And obviously, he made a lot. He's rich. So I mean, he can maybe afford to do it. But holy crap. I mean, Asana, I don't know if there was any last week because it was off last week, but he's always out there and he's always buying. So nobody's more convicted in their company than him.
Okay, so we're going to wrap it up on this Monday here. Once again, thanks to Jeremy and Tony helping us out last week. We're going to be getting more of them in the new year. Before we go, I want you to know the show is brought to you by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on screen or visit the link in the description above to learn more. Okay, Triple D.
Give me a quick Bitcoin technical before we go. Because, JR is looking at it. We're looking at it. We've been talking about, the lack of participation here. I mean, you've got gold ripping higher, almost all-time high. Silver's just been relentless, but the digital gold is not participating here. Is it a concern for those growthy names?
They've been doing okay. I mean, it's had a material impact, on them. I just don't know if, you go through different phases in the markets, right, where relationships change. Maybe this is just a little bit of changing in the guard here. I will say, look, this is looking at the Bitcoin futures. There's a wall at 95K. I mean, we hit that once, twice, 4 times since the rebound, and now you're pulling back. So
maybe if we get above there, back above and reclaim 100, then maybe is the time to strike. Like, again, as much as I was saying, when you're shorting stocks, you want to be shorting them after they're breaking down. When you're buying stocks in the dips, you want to be buying the strength after the dip. Brian Shannon, shout out to you again for always saying that. But it's true. And I mean, we've had a little bit of strength here. We're kind of just, and you can see a little cup and handle. You could argue a little bit here, but I kind of want to see the resolution above that 95,000 that Joel's giving you there.
Yep.
And then you say, okay, green light, go, seasonality here. So maybe we buy into strength as opposed to like trying to say, I think it's coming. But with so many other stocks, growthy stocks, not really doing that great right now, I'm not sure this is the environment to be all bullished up on Bitcoin here. It's been the broadened market, IWM, JR talking about it, the XBI, the drugs we've talked about, Walmart's relentless run here. So it's been a broadening out market, and kind of the AI crowded trade and the tech crowded trade, and Bitcoin's coupled in with that, is just uncrowding here right now. Does it mean the trade's over? Absolutely not. But does it mean, maybe a cooling period? Maybe valuations got to, come down a little bit on some of these names. Maybe that's, figuring out. I mean, NVIDIA in itself is going to, drive the bus here. Nice bounce back. AVGO, not a great day on Friday. But, we need to see NVIDIA stop looking like it wants to roll over.
For the Bitcoin too, I just wanted, I gave you the potentially, bearish scenario, not clearing 95. If you thought this was a major low here, at 81,000 basis to futures, you got up to 95. This is halfway back, and this is where you bounced before. So still a couple $1,000 away from it. But if you're looking, if this is a major low, we're going to 100,000, 125,000, a million. This looks like this will be a pullback to buy, of course, leading on the low of the move. Okay. We're a little bit over time here to make up.
We want to give you some overtime. You missed us. Some of you missed us. Hopefully, some people missed us.
Yeah, well, how was the chat? I didn't check the chat. Was the chat
their chat's great. We missed all you guys too. I'm away for a week. I did get some nice sun, a little bit of a tan going. Not bad. So I enjoyed that despite my family all being sick.
Okay,
I feel great. Lisa Elconin is the doctor of the year. She's like, maybe I'm pumped. I'm ready to go. I'm going to stock trade.
I'll tell her.
I want to make some trades. I didn't make any money last week. I took the week off.
You need to make some money.
Well, I didn't check the long-term account, but I didn't make any trades last week.
I do a trade.
I trade. Let's go stock trade network.